I'm Tendai Muzodzi, an investment analyst on the local markets. I'm just going to give you an overview of the investment opportunities within the Zimbabwean market. I'll start off by just giving you some of the basic statistics that you probably already know. These are statistics like inflation, where we are sitting on currently 4% per annum. Our projections to the end of the year, we are looking at about 5%. GDP growth rates, the official figure is at 9.4%. Quite a number of other analysts have placed it lower down, but there's a consensus of the GDP growth of Zimbabwe being over 5% for this particular year. When you look at other investment markets, for instance, when you look at the fixed income sector, we are talking of deposit rates pretty much between 10 and 15%. That's per annum, especially on short-term paper. Property markets, when you look at the rental yields that are currently being achieved, we are talking of around 8%. The stock market, unfortunately, with what has happened, especially from the beginning of the year up until now, we've seen the market down about 10% on a year-to-date basis. But talking about that same stock market, which brings me to the aspect of opportunities that are currently present there. When you look at the top two blue chip companies, one in the telecommunications sector and the other in the beverages industry, we're talking of the telecommunications sector trading at a price to earnings ratio of 4. When you look at the beverages sector, Counter is trading at a price to earnings ratio of about 10. Having talked about those statistics, just to give you an overview of what's currently on the ground, I will talk a bit more about the overall economic framework, especially when you look at the debt situation, the external debt that we are sitting on as Zimbabwe. We are sitting on a debt that will probably be about 8 billion by the end of the year. Given our GDP of roughly around the same levels, we are talking of a debt to GDP level of about 100%. Clearly, that has affected our sovereign rating. And it is that sovereign rating that has affected the inflow of investments into Zimbabwe. But the aspect that I would want to address is that risk level priced properly. That is where the opportunities are coming within our Zimbabwean context. What's popularly known as the liquidity conundrum, whereby we have got all the cash, but in terms of diverting that cash into long-term projects, people are very risk averse. We are currently sitting on a deposit base within the Zimbabwean banking sector of about 3.4 billion. Of that deposit base, 60% is actually on demand. That presents an opportunity for investment for people, especially from outside, that can price the risk levels within the Zimbabwean economy properly. It is about funding that liquidity gap. There are opportunities that are arising, especially when we look at the real estate sector. Within the real estate sector, we are currently talking of mortgage finance within our market. It's coming in at between 15 and 20%, and this is on tenures of less than 10, predominantly around 5 years. We believe we can structure mortgage-backed securities that will allow investors, especially from outside, to be in a position to participate in the mortgage financing of the Zimbabwean real estate, achieving yields, internal rate of returns of about 15%. Should they decide, for instance, to maintain the properties that will have been constructed from that funding, you will be in a position to achieve rental yields in excess of 10%. We believe there are opportunities for investors who would want to come in either on the short term or on the long term. In the short term, there are opportunities within the real estate sector, where we have seen construction developers achieving yields, returns rather, of over 30% within the short term. When you look at the funding side of real estate or mortgages in general, we are talking of mortgages that are being funded with prices of between 15 and 20% on papers that are being structured, which are less than, or rather more than, on papers that are less than 10 years in tenure. And these are being presented on tenures of less than 10 years, predominantly around 5 years. That is usually not adequate funding, especially when you're looking at mortgage finance. There are opportunities for mortgage-backed securities to be structured for this particular funding gap that's apparent there, where you can achieve internal rate of returns of around 15%. in terms of any construction projects that are there, should one decide to maintain the constructed projects, rental yields of around 10% are very easily achievable. There are opportunities within especially the residential sector. There is a significant shortage of housing within the Zimbabwean market. There are opportunities within constructing warehousing space, especially given the tobacco industry and even the distribution that's happening, especially for the retail sector. They require significant retail space. Other opportunities that are within the market that are simply there because of the lack of funding. For instance, the public transport system. Within the transport sector, we believe there are significant opportunities for investors to actually partner with the locals that are within Zimbabwe. When you look at the public sector, for instance, the popularly known commuter omnibus system, we have got people there who have achieved a payback of less than 2 years after having invested in a commuter omnibus system. There are other opportunities that are very apparent, especially in the manufacturing sector. The challenges that hit our manufacturing sector is that over the hyperinflationary period, there was no funding in order to recapitalize, update their equipment. Currently, they are still suffering from outdated equipment. Funding of some of those equipment will allow them to actually start producing at decent capacity levels and be competitive even in the global economic environment. We believe most of them require recapitalization and most of them actually require working capital funding. We've been structuring debentures on the local market and people have been achieving returns of around 14% per annum. The challenge though, as I indicated earlier on, people are not willing to commit for long term. So that presents an opportunity for investors, especially from outside, that are looking at investing on the long term horizon, at least 3 to 5 years, to fund such gap. That will also help the manufacturing, the beneficiary companies to be in a position to achieve the levels of capacity utilization. There are also support services within the key growth areas. These are the mining sector and even the agricultural sector. With the vast mineral resource wealth that's within the Zimbabwean economy, we are talking about the platinum, we're talking about the gold, the chrome. In those particular sectors, the big companies are investing in the actual mining of that mineral. There are other requirements for those particular industries to be serviced by local industries, and that servicing requires financing. In short, if I am to summarize, the key opportunities that are on the Zimbabwean market are really to fund the liquidity gap that's currently apparent. And that liquidity gap can be funded, especially if there is funding for a long term. We are talking of 2, 3 to 5 years instead of the current available funding, which is predominantly less than 6 months. We are still rebuilding from what happened over the last 10 years. And because of that, we believe the opportunities are there, but we just don't have the capacity on the local market. But on the international market, we believe it presents a very good opportunity for people to move in. Well, with the level of securitization that can easily be done, especially through financial institutions on our local market, we believe we can arrange a pooling scenario through unit trusts or through private clients or even through institutional investors, such that any dollar can easily be invested. But obviously, due to transaction costs and to make it viable, an investor has to start looking at least levels of over $100 if they are going to be pooled. For those that want to be treated as separate investors, you should be looking at least $10,000. For the institutional investors, it basically starts from that $10,000 going up. Well, I represent Datvest Asset Management, and we can be got on the web on www.datvest.co.zw or via email on info@datvest.co.zw.